Did you know that the movie Trading Places changed the entire financial industry? Let me tell you how. Hi, I'm Zena Kumak, financial advisor, here to take the fear out of finance. First, a quick recap of the movie. The main characters, the Duke brothers, are commodities futures brokers, which means that their job is to predict if the price of commodities like pork belly, wheat, orange juice will be higher or lower in the future depending on supply and demand for those commodities. They place trades buying and selling futures contracts based on their assumptions. If they guess correctly, they make money. If they guess poorly, they lose money. To try to cheat the system, the Duke brothers decide to steal the January crop report in order to manipulate the orange juice market. That's when our two heroes, Dan Aykroyd and Eddie Murphy, decide to switch the crop report so that the Duke brothers make the wrong bets. The Duke brothers go all in on their bets, attempting to corner the market by buying them on margin, which means that they borrow the funds to make the trades. And when they end up being wrong, they have a margin call that they then can't fill. This leads to them becoming bankrupt. What's even crazier is that this movie led Congress to passing something called the Eddie Murphy Rule, which basically prohibits using insider information to profit from commodities trading. That's the important thing to remember about this movie. The Duke brothers didn't get in trouble because they cheated. They got in trouble because they bet with money that they didn't have, and then they got hammered. Want to work with me or have an idea about the next pop culture money moment I should cover next? Leave me a note or send me a DM.